So Andrew Broomhead, many thanks indeed for coming in today, Andrew.
Morning.
Relatively healthy.
Yes.
And then there's a soft demand. So that's an interesting collection of words, isn't it? Let's go with the relatively healthy first of all.
Sure. In coming to that conclusion, we've really had to look at the key drivers for the shipping industry, which comes down to supply and demand. So on the supply side, we're looking at the gross deliveries of ships. Interestingly, we've got to look at the scrapping, and then we're looking at where the demand is. Now, we've come out of a summer weakness, so relative increasing in demand for commodities is to be expected at this time of the year. It's come a little bit earlier than we had expected, but the demand seems right now to be intact. Maybe for some of the commodities that already there's been enough stocking up in China, so that's why we commented about the perception there may be some softening over the next quarter. Then we look on the supply side of ships, and we've got quite an interesting story there. Supply of ships and the oversupply of ships really has been quite a big headline for the last 2-3 years. If anything has changed, it's really that we've seen at the beginning of this year possibly a peaking in the delivery of dry bulk ships. In January this year, we saw about 17% net deliveries year on year for dry bulk overall, and that has actually dropped now down to about 15%. Now, that doesn't sound like a big number, but it is at least a change in the trend. And I think when we look at the minor bulk cargoes that we focus on, the handy-sized ships, we've seen the numbers go from 7% down to 5%, which gives us a bit more confidence about where the supply is likely to come over the next year.
My father's been in shipping all his life, in cargo in fact, so I've been hearing about this for many, many, many years. He talked about it only recently, that there's a lot of idle ships just waiting without business. Is that a case? Is that a problem?
It depends which part of the shipping segment you're looking at. I think within dry bulk, one of the factors we have is that we're often sailing and steaming to get new cargoes. And in doing so, we may be steaming a bit slower. We certainly will be steaming empty, but we're not necessarily idling. In the minor bulk cargoes in particular, idling is not an issue that you really see.
You've got 100 handy-sized vessels.
We do, yes.
To increase that?
We do, yes. We have been increasing it. In fact, it's now the first time that we've gone over 100, and we're very pleased with that. We will look to expand the number of ships over the next year. We're looking to do that both through purchasing of ships and long-term charters. But the purchase market is going to get quite interesting over the next 6 months. We're seeing capital values softening a little bit at the moment, and I think one of the key factors will be the role of the banks over the next 6 months, particularly the European banks.
Is that a worry for you?
For us, no. We are in a strong position. We've got over $600 million of cash. We have a very low gearing, so we're in a good position to be able to capitalise on any opportunities that come up.
Any company would beg to have that. Final question, if I can. The Baltic Dry Index up 50% since June. Why is that? How much higher can it go?
Again, you've got to look at where the index came from at the beginning of this year. It's really been driven by the Cape-sized market. The Cape-sized market had an awful first part of the year. We've seen strength with iron ore and coal coming into China and Japan. Japan's actually imported more iron ore and coal than it has since about 2008. So strength coming through from there. It is a seasonal push for stocking up on coal for the winter season, which you would expect. Going forward, though, even though we're talking that we've peaked in terms of the overall number of ships coming in, there's still a lot of ships coming in next year for the Cape-sized market.
Andrew, low gearing, cash in your books, that's good. Andrew Broomhead, many thanks for coming in there, CFO for Pacific Basin there.